We're talking about three things you don't know about scaling. My main takeaway is going to be actually giving a little bit extra straight from the start. It's going to be four things. So we're going to work with four examples of great companies from the region in different business models, and we're going to give you four takeaways at the very end of the presentation. So why me? Um, uh, I studied math and finance, and I spent most of my corporate career working for financial institutions, was it brokers or banks in Warsaw and in London. And in that time, I helped a plethora of entrepreneurs, especially innovative ones, raise capital. So recently I moved to the smaller companies, and I've been working with a number of accelerators here in the region as a mentor, tutor, and also responsible for scouting and assessments. One of these accelerators I'm particularly proud of is based, well, around the Warsaw Google campus. It's Google for Startups. These are the example of the startups that I've been working over the last few years. I'm particularly fond of the ones on the right-hand side, which are fintech related. The middle column as the international ones. There's some sport tech, there's some IoT, and the left-hand side as more of the local ones. Recently, my focus was also in the Industry 4.0. So scaling. I was looking up for a definition. We're not talking about scaling a mountain, scaling a fish, or removing plaque from your teeth. I found this definition on Investopedia, and I liked it because it's talking about bootstrapping. It's about talking about growing with limited resources. And this is the well, it's very easy to scale when you got big investors, and the challenge is to find a way around it when you're not ready for that stage or you don't have that investor yet. So how does that tie in? What do we want to know about you? There's a quick survey that I guess Łukasz would like to run right now.
Yes, indeed. You should see a quick survey now. We ask you kindly to pick one option. What is your biggest challenge in scaling? And I will launch the polling right now. Please vote. We have finding talent, finding capital, business development, product development, and other as an options.
I just learned that as a panelist, I can't choose.
Sorry.
You're not allowing me to do that. There you go.
That's too much.
I guess for the people on the streaming media, you can answer via chat. Łukasz is gonna pick the answers later, and we're gonna discuss it towards the end of the presentation. So, do you want me to move on?
Yes, I will end polling right now. We have more than half of the people voted.
Excellent, thank you. So how does scaling compare to the regular old-style growth? The growth definition is just exceeding the pace of the overall economy. For me, well, I used to be, yes, I still am a registered stockbroker. It's about comparing the growth of particular industries or companies against the stock market index. So I've got an example of that. I have borrowed that slide from my ex-boss, who's running a very successful local technology-oriented private equity fund. And I think, well, I don't have a source for this. I borrowed that from his social media. I think he was particularly proud of this one because he positioned his fund very well in 2 out of these 5 sectors that were the best performers of the American wide market S&P 500 in the 2020, and the areas that I think he focused on was internet retail and logistics. I'm not surprised about the software application. I think the surprising one here is the basic materials category. These are the winners. What about the losers? No surprise here. Some of these companies halved in value, and well, but feel particularly sorry for the area that I was originally connected to, which are the financial institutions. The banks in the US didn't do that well last year. Real estate and airlines, just because of the very specific situation we're in, there's no surprise. Oil and gas maybe could be one of those that you wouldn't expect in that particular context. This is a more detailed picture of the same growth. I'd like to kind of contrast the performance of the general market, which did rise by 16%, or just 16 last year, versus I think the darling of everyone, which is changing in some kind of well, it's showing us symptoms of a slight bubble. Tesla is up 8 times. You could see it there in the middle. Amazon a near 70%. That's how much their shares rose last year. That's for comparing the typical growth of the large companies. Let's go back to scaling. Why are we talking about scaling and startups? This is a quote from a report. Strongly recommend that. The link is below. State of European Tech 2020. This is written by a partner of the conference, Slash. It's a Baltic event, I think, which is connected to Fund Atomica, which is founded by partners that used to run Casa and Skype. So they are focused on the European, some of them, and parts of Eastern European and their projects. And what they're trying to say here is that in that report is that Europe is catching up with US. We already have a fair share of companies of 1 billion valuation and VCs that support them. We already have some of the mega valuations available, like with Spotify or ADN, I think around 50 billion. We also had one company turn a unicorn just last year. It's the UK-based Hopin, the teleconferencing device. And the main takeaway from that report is that Europe is almost there where it should be compared to the US startup and capital raising and exit markets. What we need to do is make sure that we recycle the capital and the human talent much faster. They're saying that the US companies tend to to start, raise capital, and fail quicker than the ones in Europe. And we have to make sure that we get experienced founders and venture capitalists to stay around and not move to the US. So that was one of the takeaways. And they're also mentioning that when they started the conference in 2016, they had raised a question about raising 10 million. No one blinks at the 10 million seed rounds this year, and we're going to show examples of that shortly. Let's get back to scaling. Traditional scaling. There's a great article provided by the host of this. There's a blog article about the ANSOF matrix provided by the organizing of this webinar, Pragmatic Coders, the link below. This is not what we're going to talk about. It's about how you find yourselves between new products and new markets. I guess the fourth one is a kind of abundant addition, diversification of new markets and new products. I tend to think that traditional scaling was reaching out to your customers via digital channels, either by digital marketing, social media, or chatbots, and we're going to have a great example of that shortly, or by rolling out your app and collaborating in the clouds. IBM is actually pointing to these points within the efficiency and strategic value. so much easier to do that and to work with people all around the world and roll out your product to all the different markets using this infrastructure. Well, I promised 4 examples. These are the first two. Within the B2B business model. And both these examples come from Poland. We're going to stick to the Eastern Europe region, the one I'm from, we're from, and we're quite proud. The first one might be already known to you. This is the landing page. It's called Live Chat. It's been established 20 or so years ago. And very simple landing. They say what they do. They provide a chat outsourcing tool for companies that are looking for a contact with a customer, either for sales or help desk reasons. They're putting the main metric straight on the landing page, 30,000 companies served, and they're putting the logos of the main clients, which helps. What do they? How do they get there? What do they do? This is a snapshot, thanks to Google, of stock market stock market valuation. You can see the COVID year really helped them, doubling up in size just over 2020. It's a relatively small valuation for a company of that age. I think they're just under, you can see the valuation in the lower left, it is just over €500 million in currency. How did they get there? They were founded in Wrocław. From very early, they found the right business model, and they addressed the needs of clients in the US. They managed to set up a representative very, very early. They attracted a big ticket investor. I don't know if you've heard about Naspers. It's one of the largest internet companies that has investments in emerging technology companies. I think they're best known for the investment in Tencent, the owner of WeChat. They also have shares in some of the Russian internet, I think via mail.ru. They're also running, the owner of a delivery, European delivery startup. What I think we can learn from LiveChat is they monetize very early with the right use case. So that means that they could go without the investor from the very beginning, and they started addressing the needs of the main market they found, which was the US. So they established an office there very fast and developed the coverage. You can see they got 30,000 corporate customers, and 80% of them are in the US. What are the most important things? It was they're solving a simple problem, identifying the best prospect visiting a corporate website and closing the sale or closing the help desk ticket with that particular client. Very, very simple, very easy, very old style. Let's get back to the slightly younger and slightly more advanced B2B example. Again, a company with Poland, but with an interesting international exposure called Cosmos. Let's start with a landing again. I love this one. I did incorporate the picture of the founder because he's so young. I met him in 2016. He was looking at a student. Miron Mironiuk is his name. Positioning straight from the start. You got offline, you got retail, increase my ROI. And they got the main metrics again straight under the search box. So that's simplifying what they actually do, which is they're connecting. Well, they managed to attach themselves to one of the restaurant aggregators in Asia. So they track a lot of movements of people around stores in the wealthy parts of Asia, and they're selling this bundled data to help the big brands target their online marketing. And they started with I guess, a business relation from a big marketing agency that Miron used to work for, and they just developed that solution, kept to that idea. Again, well, this is the timeline. They did participate in the Innovation Awards. They attracted this relatively small ticket investments in the last 2 years, over $27 million. But what I would like to take away from this is they were solving an existing problem with the client that they knew, and that was via, well, an early angel financing that they were able to set up this tool. So they had early monetization again. The main metrics they're looking at is the number of phones, the number of stores that they have access to, so they connect the online presence of the customer, well, the offline presence of the customer with the online brands targeting. And it's a simple idea. It's just recombining existing data. So I guess it was just perfect timing for that particular market, and the geographical arbitrage. So how they present themselves, how they talk about themselves, is that we've been found in Poland, but we created a new tool in Asia. And I can't get a better picture, so I used one from Miron's presentation a few years back. I hope he doesn't mind. I love this one because the way he's presenting himself and the idea as a cosmopolitan one. He's not only has two phone numbers, one in Hong Kong, the other one in the US, but also, and that picture, I guess this is yeah, it is from Manhattan backdrop. He's kind of showing the diversity of his idea and his team. I think that's brilliant. Let's move on from the B2B to the B2B2C perspective. This is the one that we're trying to well, guide some of the startups that are lacking the big financing and lacking the first big connections. And what it is, if you don't know the definition of that, is basically you don't sell directly to the NC, you sell via a partner that's not interested in selling a product. So you basically bundle with a second B. And that's a definition coming from the blog of Andreessen Horowitz. We're going to be quoting them later as well. Why would you choose that particular growth model? For me, it's always about asking ourselves and testing some of the available data. Where are you likely to gain the most, and which channel? How long will it take to reach a satisfying and secure market share in that particular segment? If you have limited resources, and how are you positioned to capture that value? So it's a question of first testing and measuring finding a key metric, testing and testing it and reassessing from time to time if it still works for you. Let's move on to the B2C examples. We started to talk about the end consumers. This is a tricky one because for me, it's one of those not so sexy topics, but they did very well. It's called Brainly. What is Brainly? I don't have the landing, but it is a peer-to-peer learning solution, community-driven. So you can think about it as a internet forum for kids, teenagers who are looking for help in their homework or some quiz that they need to take. So you could say it's that's the problem I have with them. I don't see the exact monetization here, but it is a sexy area because it's education. They managed to attract 1 million active users monthly active users in 2009, around the first year they started. And now they're up to 350 million users, which is one of the most important metrics they cover. I guess the text is outdated. I'm showing 150 versus 350, which is the current number. How did they start? Small seed in 2012. What they did right, I think well, we'll show that in the next example, but they, using the first money they received in 2012, in 2013 they expanded to large languages like English and Indian. There was, I think, 9 more. That helped them after next 2 rounds in 2014 and 16 to expand, open a New York office and acquire a US competitor called OpenStudy. And then they attracted Naspers again. So they were looking at the biggest player in the local, well, in the emerging markets, and got them interested. So they managed to lead, maybe not a huge ticket, but well, with a fantastic investor. What they did right, it's they started targeting tutors and other educational stakeholders. It's obviously a COVID story, so that must have helped them last year. They have, well, over 300 million users, but the US with 30 million users is the only market that they tested some monetization. So that's why I'm not really convinced about the monetization. But what I like, they did find a deep pocket investor, and that managed to help them scale and wait. Well, it's over 10 years since they started, and to get to the right business model, which is well, for them, trying to get some kind of subscription service in the US. So that's the takeaway from Brainly. What is the biggest? That's what we usually show to the teams we support. What are the pros and cons of these two business models? Well, everyone wants to acquire a lot of end customers, B2C. I call it dreams of world domination, but this is very expensive. You'd have to have great straight financing. It's very easy to companies from the higher capitalized markets like US to encroach into your territory. As one of my favorite professors, which we're going to be quoting later, says in his New Year wishes, make sure that Amazon doesn't invade your territory because they have unlimited sources. So that's the B2C space. So B2B2C, as opposed to that, is relatively low cost. You do lack control initially over the end customer, but you're building, as Andreessen Horowitz mentions, a powerful mode by bundling a product with and creating some kind of secure channel. So it's not that easy to get in and get out for these customers when they get there. And this is the last example, the fourth one, and I guess the most controversial. I don't know how many of you have heard. No, the other question would be right. If any of you has not heard about Wirecard, it's one of the greatest stories of, well, sad stories of last year. What is Wirecard? It's a payment provider, basically, and it's a fabulous story of growing from nothing to over, well, almost 20 billion euro valuation, and then a spectacular fall at the end of previous year. What they basically provide was for their partners, so that's the B2B2C model, they provided payment and credit solutions, and then using that, after a few years, they managed to develop their own product. Let's see how they did that. Founded in 1999, German. They did move to some of the new world emerging markets, 2007, Singapore, New Zealand, South Africa and Turkey, and then US. I think Asia was the most important, and that was the part of their downfall as well. And they became well, they listed themselves, I think, around 2005, 2006. Got included in the main index of the German markets, in the tech index, I think, around 2016, and attracted, became a European fintech darling over 2018, 2019 that attracted SoftBank. We're not going to talk about my opinions of SoftBank. They did a lot of investments over the last few years. Not all of them work. And there was a spectacular fraud in Wirecard. Well, you can read about more. There's a lot of investigative journalism about that, but that ended the company a year ago. But let's focus on what they did right. And my takeaway from that is that they found partners. They were looking for fintech solutions, cheap alternative to the big providers early on. And in, I think around 2005, 2006, they helped one of the biggest German challenger banks to provide them with a spare bond system, which helped them get the license with a German regulator, BaFin. And from very early on, they were focusing on niche markets. Well, they started in 1999, helping gambling and pawn sites get payments from their customers. So you can imagine these clients were thinking, yeah, we don't have to, we got a high risk business anyway. We want someone else to take care of the payments. And that led on to them taking over the whole payment and credit operations from giants like the KLM, the Dutch airline, TUI, one of the largest tour operators in Europe, and well, the main metrics they used, they addressed the highly populated markets. They served almost 300,000 companies serving further clients with transaction volumes around over 100 billion. And on the back of that, they managed to develop their own tools, and this is how they wanted to create more, claim more value from that channel. They have created a NFC, I think a MasterCard related tool for parts of Europe. Also, and this is an interesting niche to operate in, they helped to introduce WePay, which is the well, for Chinese tourists coming to Europe. So I have another company that I work with, which is trying to kind of get into that space. So it's an interesting choice of a niche, looking for in the pre-COVID years, looking for tourists coming from other regions with other tools on their phones. This is an example from the presentation just before they fall, showing how well they're using the buzzwords in fintech, frictionless consumer experience, cashless worlds, financial inclusion. That's how they presented themselves. Why did they go wrong? I think they grew too fast. And they became a stock exchange darling to that extent that the German regulator has defended them against aggressive journalism from Financial Times, blaming Financial Times for trying to short the story. Similar things is happening just last week, I think, to Tesla. One of the heroes of The Big Short is writing about Tesla as a bubble. That suggests some reading on that. It could be interesting. And that darling status led to questionable hiring and finding people with not the right set of ethics. And I think that's what caused their downfall. They misappropriated around 2 billion euros. Misaccounted for them somewhere in Asia, and that led to that spectacular fall. Let's close the examples and move on to partnerships, which is the main story of the B2B2C kind of business model. Where can you find them? And in today's world, so easy to do that. I'm surprised. I'm working from my place in Warsaw. I've been part of the Barclays Rise, which is a fintech accelerator event. I'm a mentor there. It's an event operated jointly by, I think, the Barclays office in New York, London, and I think somewhere in Asia. There's a lot of hubs where you can attend. Some of the venture capital firms also build their own cooperation spaces. You can build one on your own. One of my Industry 4.0 mentees here in Poland has created their own YouTube channel, a small community of startups in the same space, providing IoT solutions to industry, that is trying to create them not as a single entity trying to get some business from big factories in Poland, but creating a group of complementary solutions. So you can do that on your own. What are the rules for building partnerships? Well, it's about being complementary, not competing. So you enter a cooperation when the other B doesn't want to enter your business. That's a good quote. Comes from the blog of Andreessen. There's a flexibility. You need some flexibility. You don't want to show that you would like eventually to take over the end customer. So you're trying to provide value, and you flex this customer ownership only when you can prove that you're able to contribute more than you receive from the partnership. And this is a great way to say that. What it basically says is, if you are able to build your own customer product, consumer product, over and provide it to that relation, and it's going to win the consumers over, you're ready to do that. But in the meantime, you're just staying in the shadow of well, as we mentioned before, lacking some of the control about the end user. That's my favorite topic, being a stockbroker. These are free questions that come from my favorite professor, Damodaran. I think he teaches at the New York University Stern School of Business, and he's providing valuations, lectures on valuations of some of the sharing economy giants of the world, like Uber. And these three questions come from this talks at Google, which are the value of stories in business. The link is below. Strongly recommend that. What he's saying here is whenever you have found your business model, you've chosen the metric, you've built in some forecast, you shouldn't get into the impossible range, which is growing faster than the economy, becoming bigger than the local market, or something unrealistic for future margins. There's things that are implausible, so you can get away with, not with a math financial kind of geek like myself, but sometimes it works when you show your profits with no competition or returns without risk. So basically what we're saying, you should find yourself somewhere in the triangle on the right hand side, which is a combination of the growth, risk, and reinvestment. You have to play with these numbers. So anyone with enough financial background will be able to spot whenever you're getting out of that zone. And these are the promised 4 takeaways from today. If you haven't decided on your growth model yet, and I'm assuming scale-ups usually have tested their hypothesis, their business model, they already know where they are. So whether you're going to be a B2B or B2B2C or B2C kind of operator, you should be trying to assess how much value you can capture in a particular channel and then stick to that. You can reassess that from time to time and pivot, and this is a popular word, and you have to adjust to the way your finance, your competition is financed, and how the world changes, and this happens very fast, especially last year. You look at your main metrics on your projections, and not only you have to check whether they are possible, so they fit into the Damodaran triangle, but also if you get to that particular projection and you've kind of made it conservative enough to fit there, does it create enough value for yourself, for your employees, for your partners, and for your investors for you to stay there? Or should you move to another area? Because some of the ideas solve great problems, provide great value, for the users, but not for the teams operating or the investors operating in that space. And that's very important. And that's one of the things that I think a outsourcing your operations to a great IT team should be driven by. It's not about throwing a lot of money at an IT project. It's about testing the market first. So we won't take all of your money right now. We'll take a small chunk. We'll test the market for you and see if it works. And then, if the answer is yes, we'll take more of your money and build a solution. Optimizing financing. If you're monopolizing a niche, can you take it on your own? Do you need the investor straight away? Do you need it later? Are you able to bootstrap? So that's the time versus money question. And if you manage to get financing, always get the best people. Diversify, and I cannot stress that enough. Look for advisors, for people with not the naysayers, and not people that will counter you all the time, but people that you can have have different backgrounds. They have different experiences. They are coming from a different. Well, we tend to surround ourselves, stay in our bubble by people from the same unis, from the same city, from the same region. Look for people outside of that zone. That really helps to get great ideas and great input to whatever you're doing. This is it from me. Let's get back to Łukasz so we can discuss the survey.
Thank you, Jarek. Many great insights. So it's a Zoom webinar, so we can actually give you a voice. We can allow you to talk if you want to. So any participant, by raising a hand or writing on a chat, can indicate that they would like to ask a question or share with us their comment. So I encourage you to do so. When it comes to the voting that we had on the beginning of the webinar, the most votes went to the category business development. So what is your biggest challenge in scaling? Most people voted for business development. What's your take on that, Jarek?
I went for finding capital, which is I guess we have viewers coming from different parts of different regions and different countries. We had an interesting discussion. We were trying to create a bridge between Poland and UK, and we're looking how these two countries can help each other on the fintech vertical. And this was a interesting observation. Poland is known as a pool of IT talent, and we outsource a lot of operation for global banks and for other companies in the tech industry. And this has been a trend for the last 3 or 4 years. So we have virtually a whole new, all regions developed with skyscrapers filled up with people. Well, not now, but not over the last few years. Filled in with people that are providing the IT, financial, and other technology support for great companies around the world. And where UK fit in that picture, in that discussion, was especially in the fintech range. UK, well, just before Brexit, we had that discussion a year ago. Was UK stepped in there with the ability to raise capital and with business development. So I guess this is one of the hints of how to build and internationalize. You have to find someone that is familiar with your target market, with the big hubs. And in the fintech world, it would have been, it used to be London. It could be New York, could be Singapore, and find someone that could help you develop the business there. There's not much to left. We got a few recommendations on the reading. I shouldn't be putting these on because I haven't read them, but they came strongly recommended from the people I trust. Especially the first one. Apparently, it's a logical take on the lean startup, and it's Lean Analytics by O'Reilly. It comes strongly recommended. I'm not sure about the other one. Because with a title referring to the Rockefeller, it kind of refers back to the old era. I read that book when I was a kid about creating the oil empire that was ancient. It's not so new anymore. And the third one we've been referring to so many times already. There's no point of even talking about it. The Hard Things About Hard Things by Ben Horowitz. And what we left with, this is via contacts. These are the people behind today's webinar. Łukasz, you can.
Yeah, we invite you to follow up with us. You can book Jarek for like half an hour free consultation via the booking link provided, or you can try one of Jarek's recommendations and partner with implementation agency from Poland and book a call with me about product development. So we invite you to do so. Jarek, it was a pleasure. Thank you for today.
Thank you for organizing this, and thanks everyone for their time.
Thank you for being with us. Please fill out the survey at the end of the webinar. Bye.